completed a major section C question topic last class, functions of commercial bank. We have discussed primary functions, secondary functions. Under that we discussed two major points, agency functions and general utility functions in detail. Moving on to the next main topic of the chapter, role of commercial banks. We already looked at the introduction, why was banks introduced, when it was introduced, and what was the need for banks in India or in our economy, correct? Now we are going to look at the role of commercial banks in the development of our economy. There's a very commonly asked question in your final examinations. Let's look at the first point. The major role that banks plays is economic development. Capital formation is the most significant variable of economic development. So, as we've always discussed, for finance is the lifeblood of any company. Equally, finance is important for an entire economy to run, right? Without finance, you cannot buy raw material, neither can you sell your goods, neither is there anybody who's going to purchase your goods that you have manufactured or services that you are ready to render. Correct? Everything revolves around money or finance. Now, who is generating that money, or who was the first institution to formalize or channelize the funds? It was commercial banks. We have seen how commercial banks has grown from even before independence, how it was set up, correct? And over the years, how there was Reserve Bank of India, that is RBI, was instituted to look after or to be a watchdog of all the other commercial banks under its control or under its guidance. So these commercial banks always focus on economic development. Yes, I'm collecting the savings of public in the form of various deposits. I'm sure we have looked at all the four different types of accounts, correct? Savings, current, recurring deposit and fixed deposit. I'm collecting deposits from the public, but collecting the funds is not only enough. Making sure these funds are reaching to the right hands is equally important. Now, who is the mediator between these both savings and the lending? It is the commercial bank. That is how banks have channelized the funds in terms of capital formation. There are so many companies, let's say there are so many entrepreneurs who have great business ideas, correct? But in order to put that idea into reality or convert that idea into a business venture, what do you need? Capital. The major or the most basic foundation for a business or for a business venture is what? Capital, money, finance. Who is it providing? Banks. Today we have commonly called as venture capitalist, or we have debentures, or we have other sources of funds. But back then, none of this was available. What was the most reach out destination for all those people who are looking out for funds? It was commercial bank. Banks came to the rescue of all the entrepreneurs or business people or industries who require funds to establish their businesses. By establishing the business, it created employment opportunities. We were able to export goods and services. We are able to render the same goods and services to our Indian economy. That way, we were able to develop, or India became a developing economy. From an underdeveloped, India started moving on toward developing economy. So, we need to observe the role of commercial banks in economic development of our country. Second point, mobilization of savings. Accepting deposits in various forms of accounts and providing them interest. As I told, how does banks earn profit? Bank will definitely aim at profit making. How do they earn? If they're giving deposit, if you are a fixed deposit holder in a particular bank, and the bank is promising you 10% rate of interest, and there's another person who is lending or borrowing loan from the same bank at 15% rate of interest. Okay, bank is paying you 10% and bank is collecting how much? 15% from the borrower. That means the 5% difference over there, that is the profit margin. So what is this whole process called as? Mobilizing of savings or mobilization of savings. Just do you think keeping the savings in the bank is going to grow? No. Banks or any kind of institution, just by having money in their accounts, it's not going to grow unless and until you are able to move that savings into a productive investment avenues. It can be stock market, bond market, derivative instruments, or foreign exchange instruments, or government bonds and securities, etc. All these savings which has been collected, or the capital, or whatever minimum balance that you have to maintain, no, all that goes where? Mobilizing. That means bank is moving your deposits, your savings into productive investment. If banks are not going to invest your amount into some productive investment, there is no guarantee that you're going to receive interest on your deposit. Is that clear? So banks earn interest or make profit. How do they make? By mobilizing the savings, by moving all these deposits or savings into productive investment avenues. I've already told you what are the various investment avenues, like gold, mutual funds, or today we have equity market, bond market, etc. So these are the first two major roles of commercial bank: economic development and mobilization of savings. Next up, third one, creation of credit. Banks create credit by providing funds to entrepreneurs, which lead to more investment and more production. Now, back then, if recently when banks were introduced, initially when banks were introduced, there were just one or two banks in our country. All of them would move towards only those regional, one particular bank where it is in an urban city, probably mostly it would be in urban city. Now we even have banks for every regional rural banks. We have banks that are set up for even the farmers to reach out, or even the poor people, or not much civilized places, yet there we have banks set up. Why? To create credit. Why do we create credit? So that people who are involved in business ideas, especially entrepreneurs, as I've earlier said about Oyo Rooms, correct? Now he is a entrepreneur. He had a great idea of renovation, or changing the hotel industry itself, right? The way you look at a hotel industry, right from selecting a hotel, the price range, the ambience provided over there, the facilities provided, everything was just his idea. And to convert that idea into reality, he needed money, or he needed financial assistance, and that is provided by commercial bank. Now, like that, there can be so many stories and so many entrepreneurship stories that we can hear, or their lives, how they've converted by taking credit or by taking a financial assistance from commercial bank. Read that last line: lead to more investment and more production, because the population of India is growing day by day, and you just can't manufacture 10 lakh units in a month and keep that constant. The population is growing. That means what? Every human being has numerous needs and wants, both needs as well as wants. Not a single bank can fulfill so many needs, correct? Single industry or a company cannot fulfill these growing population needs. So we need more entrepreneurs to come up, more variety of industries to be established. How do they do that? With financial assistance or with the government assistance. Is that clear? So in order to meet the growing demand, growing supply, growing needs of people, we need more entrepreneurs and industries to be established efficiently and providing good or quality oriented goods and services to customers or society. So this is the reason why commercial banks are involving themselves in creation of credit. Point 4, channelizing the funds into productive investment. Finance alone is not sufficient for economic development unless accompanied by investment. We've always learned from our childhood, right? At least being said by our parents or by our grandparents, save money. Have you heard of that word save, S-A-V-E, right? We've always heard about save, save and save money, right? For emergency, for education or for a marriage, etc. We've always heard from our elders that to save money. But by saving money, does your money grow? That's a good question, correct? Money does not grow by saving. Money grows by how? By investing. So this point finds out that channelizing the funds into productive investment. So saving money is not going to make your money grow. If you're keeping 1 lakh in your wardrobe for 5 years, is it going to become 5 lakh after 5 years? No. The money is still going to be 1 lakh even after 5 years. Therefore, if you want that money to grow, what do you need to do? Channelize that 1 lakh rupees of your savings into what? Productive investment. Again, whenever you're investing, you need to look at two aspects. Okay, your risk and your return. These are the always two words that are always associated with your investment avenue. Whether you choose to invest in mutual funds, you choose to invest in gold, you choose to invest in a bond market, etc. Wherever your investment avenue is, whatever your choice of investment is, remember to look at the risk and return, because each investment will have its own degree of risk. Some will have low risk, that such as government, securities. Some will have high risk, let's say for equity, correct? So depending on the risk of what is the amount of risk that you as an investor can take up, and what is the return that you're expecting? Are you expecting a huge amount of return once in 5 years, or are you looking for a consistent periodical return? When do you get consistent periodical return? For an example, debenture. Debenture, irrespective company makes profits or does not make profit, should they pay you interest? Yes, they have to pay you interest. So that is a periodical return. Let's say a bank deposit. Bank deposit is also same, correct? Every month or every year, interest is going to be added to your respective account or deposit. What is uncertain investment avenue? I mean to say, the return is not so constant or it is not consistent. Best example is equity, correct? Equity shareholders are the owners of the company. If you as an investor are going to be a equity shareholder of a XYZ company, because you are the owner of the company now, if the company is earning profit, of course you're going to get the majority share because you are the owner. But in case the company is facing loss, can you expect a return then? No, you cannot expect a return. Because you're the owner, you have to enjoy the profits you earn and you also have to bear the loss equally. So there, your returns on investment is not what? Consistent. But then if the company is earning super profits, you are the first person to get benefited at large. Is that clear? So whenever we are talking about investment, we need to look at risk. What is the amount of risk that you are able to take? Equally your return will be associated. Higher the risk, higher the return. Lower the risk and lower the return. Is that clear to all of you? So finance alone is not sufficient for economic development unless accompanied by investment, as I told. And also one more thing that you need to look at it is liquidity. Whenever we are talking about investment, third thing we need to, what are the first two things? Risk and return. The third thing is liquidity. What is liquidity? Easily convertible into cash. Let's say you have bill of exchange. Now all of you know, I'm sure you're an expert about what is the meaning of bill discounting or what is factoring, correct? It is a instrument for liquidity or working capital. Easily you can convert that paper, that is bill receivable, whatever that's paper that you have, bills receivable receipt, that if you go to the bank and present it, immediately that paper will become what? Money. Yes or no? That is called as liquidity. How quick can you convert your instruments, financial instruments, into cash? Now let's say your savings you have deposited into gold, mutual fund, bond, etc. before you decide your investment, you need to check your return and risk. Third thing, you also need to check your liquidity point of view. Let's say there's an emergency, right? There's a medical emergency. Now, you can't store up all the money blocked in certain investment avenue when it is not coming any use for your personal medical expenditure. So, you need to choose your investment wisely so that whenever there is an emergency of funds, you can easily liquidate it. Understand? You can easily sell it and make money quickly. Is that clear? So, commercial banks is one such institution who are going to channelize the funds into productive investment. So, back then, if banks were only focusing on entrepreneurs or industries or business people, today we see banks are open to giving loans to even students. There's something called as educational loan. There's something called as personal loan, car loan, home loan, etc. Why? Banks are also focusing on giving services to wide range of customers. It's not just individual industries or entrepreneurs, but public at large. Is that clear? So we have learned 4 points today. Role of commercial bank. We studied that it plays a huge role in economic development. Second, mobilizing of savings. Third, creation of credit. And fourth, channelizing the funds into productive investment.